Hello, everyone. I'm Madhav Rajan. I'm the Dean and the George Schultz Professor of Accounting at Chicago Booth. Thank you for taking the time to be with us today. I'm thrilled that you could be here as we welcome Booth alum Jose Antonio Alvarez of Banco Santander to our Distinguished Speaker Series. This is the DSS is, of course, a long-standing Chicago Booth tradition, and we bring together high-profile leaders from business, from the government, from the community, to the school to share their insights and experience. And we switched to the virtual Distinguished Speaker Series at the start of the pandemic, March of last year. And this has been really well received by students, alumni across the globe. We had great chats with a lot of alumni spring a year ago, people like Kurt Delbene from Microsoft and Tom Ricketts of the Cubs, Jenny Scanlon from UL, as we found out how their companies were reacting to what was then the very, very new threat of COVID-19. With the success of the virtual series, we continued the programming through the fall. We had Anne Mukherjee from Pernod Ricard North America, JP Gan from Inns Capital, and many others. And this year, we're off to a great start. We had Eric Gleacher, Russ Hutchinson from Goldman, and just this past, I guess, 10 days ago, Dan Caruso, whom I interviewed from London. And with that, I'm really thrilled to introduce today's distinguished speaker. Jose Antonio Alvarez was named Chief Executive Officer of Banco Santander Group in 2015 and as Executive Vice Chairman in 2019. And prior to that, he was the bank's Chief Financial Officer for a decade, and before that, the head of its finance division. Before joining Banco Santander, Jose Antonio held positions for as head of the finance division of BBVA and Argenteria, and as chief financial officer for Banco Hipotecario de España, among many other roles, which we will talk to him about. Jose Antonio is a member of the board of directors of Santander Brazil, and we're thrilled that he's a member of Chicago Booth's Global Leaders Group. Thank you very much, Jose Antonio, for being with us today.
Thank you, Mahat. It's a pleasure to be here with you. As always, to get in touch with the school it's always makes me to remember old times when I was younger. And that's always great, yeah.
Thank you. To the audience, if you've been to these events before, some of you I know sent questions in advance, but please feel free to send in other questions through the Q&A feature, and I'll try to get to as many of them as I can. So Jose Antonio, maybe to start, could you speak to us about your career path, sort of before and after getting your Booth degree?
Okay, I I went to the college. I got my BA in economics in a university in Spain, in Santiago, northwest of Spain, for those of you who are familiar with Spain. And I started my career in industrial conglomerate. Was an interesting time to me. After being in the college studying economics, when my very first 3 or 4 years, I was working with engineers, all the engineers around me, and I was making the number crunching, to be honest, for the engineers that were not so familiar with those numbers. And after that, I started in the asset management industry, and I became to the finance through the asset management industry in the beginning of the 90s. I went through, I was at some point fund manager in very simple money market funds or fixed income. I went to you mentioned, I was appointed when I was 32 CFO of Banco Hipotecario de España at the time that I went to Chicago. At that time was GSB, no, was not yet Booth, was GSB. In 1994, I got the MBA in 1996. We started in Barcelona, was the very first course in Barcelona. I do remember that we were like 50-something people in the classroom from 14, 15 nationalities, different nationalities in this very first MBA at Barcelona. After the MBA, I continued my career in finance in Argenteria, BBVA, where I became deputy CFO. I changed in 2002, was quite an interesting decision at the time, from BBVA, the main competitor of Santander, to Santander. That was quite a decision at the time, and where I became CFO in 2004. So I went during this period through well, as you know, Banco Santander at the time was acquiring banks, or several banks in UK, US, Latin America, even Anro deal, that was a high-profile deal at the time that I was personally involved there. And I became CEO of the company in 2015. So I went through the financial crisis as a CFO of a bank. That is always an interesting experience. And I became CEO in 2015, as you rightly said. And well, I'm here today, basically doing, being the chief executive of the bank till today. Yeah. So that's my career. Yeah. So I would say always in finance, but the very first 5 years where I was in the industrial world.
Mm-hmm. So maybe we'll go through different pieces of that, Jose Antonio. So
yeah, sure.
Maybe talk a little bit about just Santander, just the history and how it grew to be a global bank, and what attracted you to that role. This
is an interesting history. Santander was incorporated in 1857, and then in the city of Santander, that is a city in the north of Spain, with a port. And the port is critical because the bank was incorporated in order to fund the trade between Spain and Latin America, mainly Cuba at the time. That was an important colony of Spain at the time, and the one was incorporated for these reasons. Yeah. So for almost a century, the bank was in this region, in this province, being a small one, acquiring or merging with some other local ones that were relatively tiny or very tiny. And only in the 60s of the past century, the bank expanded through out of Spain, opening branches all around Spain. And as a matter of fact, in 1987 was the fifth largest bank in Spain, relatively small size, 140 or around 140 in the world. It was very profitable, but the size was relatively small. Yeah. So when Emilio Botín was appointed chairman in 1987, was the guy who expanded the bank through a significant number of acquisitions, both in Spain, to become in Spain the largest bank in the country, to the acquisitions of some failed banks. And afterwards in the 90s, basically in the 90s and the beginning 2000s in Latin America, where we now are the largest banking franchise in, from Mexico to Argentina. So with relevant positions in Brazil, Mexico, Chile, Argentina, and in other countries. And in the 2000s, we invest in basically in consumer finance across Europe, UK, and US. So now the bank is a large, to give just some color about the bank, is 1.5 trillion euros balance sheet, 1 trillion euros loan book, pretty much or close 900 billion deposit book, well, with a profitability, the return on tangible equity this year stays in the around 12%, 12 point something percent. So this is a pretty it's a summary of the history of the bank. Mm-hmm. And now we are basically a bank that works in our footprint in Europe and the Americas. Yeah. So and that's where Santander is today. Yeah.
Mm-hmm. Maybe could you speak a little bit about, I had mentioned you're on the board of the Santander Brazil. Could you maybe speak a little bit about Brazil and sort of what sort of special role that plays with Santander?
Well, Brazil in terms of profit is our largest franchise. So we generate in Brazil a bit less than 30% of our profit. So it's our largest market in terms of profit, not in terms of the balance sheet. Mm-hmm. You know that in emerging markets, the balance sheet tend to be significantly smaller than the ones in mature markets. So although our balance sheet is in the region of 100 billion in the country, or 100 billion euros, we have a highly successful and profitable franchise in the country, where our return on tangible equity is north of 20%, and where, the origin of our investments in the 90s and the beginning 2000s in the region of Latin America, the intention was to capture the structural growth that we thought at the time that was about to happen in those countries along the time, And naturally, those markets are more volatile than emerging markets, but it's true that in Brazil, this is the case. And we are now competing head-to-head with Itaú and Bradesco. We are the most profitable bank in the country. At the same time, our bank there is kind of a supermarket from the CIB to the consumer finance. We play in all the areas of the financial industry. In a market that, in a country that, as you know, is large, is very diverse, and with significant difference between the different areas of the countries. Like the Brazilians used to say that it's like a continent. And well, in terms of size, for sure, in terms of banking industry, it's also a significant difference between the, I don't know, for those who are familiar with Brazil, the Sao Paulo area is kind of mature market. Eastern European countries maybe this with a GDP per capita north of $20,000 per capita, and some other areas in the country where they are really emerging, so with $3,000, $4,000 GDP per capita. So this require having a bank that is able to take advantage of different economic scenarios inside one single country.
Mm-hmm. So you mentioned that the great number of acquisitions you did and the fact that your footprint is largely Europe and the Americas. A question has come up about, somebody sent it in about what's your strategy in Asia? Do you feel like that's a place that you want to make investments in going forward?
No, in Asia we have very few business. It's true that we run some CIB business, mainly to serve our large corporates in Asia that do business with our existing footprint. So in fact, we've been successful in intermediating deals mainly from China with Latin America. You look at the deals, the Chinese companies, largely state-owned companies, as it happens in China. With Latin America, we intermediate the majority of them. Yeah, so this is a business that we have. And this is in the CIB space through a couple of branches across the region, some in mainland China, Hong Kong, Singapore, and all this. But this is CIB. On the more retail side, the only business we have is I think we are the largest auto finance company, in the non-captive auto finance company in the world, and we have a company incorporated in China where is relatively small, is highly profitable, and while the environment is still quite demanding in terms of for foreign companies to grow in China because the funding issues that is very difficult. You are not allowed to gather deposits, and it's difficult to grow without a proper funding base in China. Although we are interested in the market, and as far as of today, the company is working well. It's tiny for the group size, but it's working well. And maybe we expand this in the same space, consumer. We are looking a bit into India, maybe to incorporate some companies there in the consumer finance space.
Mm-hmm. So maybe let me go back a little bit. If you could speak about, for example, just going back to the early 2000s, what's been the impact of the European single market on sort of European banks?
Well, for us, at the beginning, we took a significant advantage from the single European market and from the euro. Yeah, so as a matter of fact, for Santander, the euro at the beginning was a very good news because it reduced significantly our cost of equity at the time. And we were a highly profitable bank at the time. We were in the high 20s or mid 20s in return on equity. And while with a strong currency, we made the acquisitions both in Latin America based on this strong currency and on the back of a reduced cost of equity. Our cost of equity after the euro and before the euro was significantly different, and we took advantage for this. So first thing I should say is this was great news for us at the time. Yeah. So, and this largely helped Santander to grow and to expand across outside Spain. Since that, we've been going through a different period till the financial crisis. Well, everything was, I should say, business as usual. You remember this period where the financial assets were booming and all these things, and the financial, and we were at the time acquiring business, as I mentioned before, in different regions. In the financial crisis in 2008, 2009, we were relatively unscathed. So we didn't suffer that much. So in fact, in 2009, our profits were in the region of 9 billion euros. Net profit at the time was one of the best in the industry. And our return on equity, we start to suffer with the real estate crisis in Spain, the crisis 2 years later than the others, and with the sovereign debt crisis in Europe, all the euro sovereign debt crisis, real estate crisis in the period to 2010-2013, where the Spanish economy did poorly, with 3 or 4 years GDP going down and a real estate crisis going there. After that, the financial crisis is a game changer for the whole finance industry. For those of you who are familiar with the industry, you know that the capital requirements more than double. So I do remember when I was a happy CFO in 2007, I was facing investors and telling them, oh, my core equity tier 1 is 6%, I'm going to acquire something, I go to 5.5, and I will go back in, I don't know, 24 months or 18 months to the 6%. Now, while this seems like almost a joke, and our capital is probably 2.5 times higher than it was, and the return on equity, to get the return on equity we were able to get at a time is much more demanding. As I said, we are one of the best among Europe, one of the best in terms of return on tangible equity, north of 12%. When the European industry as a whole is in 6, 7, 8%. So we are well ahead the package. Having said that, our target is to be 13, 15%, but we'll not go back to the old 20s that we were before the financial crisis, with much higher leverage than the one we currently have. Yeah.
So there's a question about sort of how financial institutions in the US have done versus, say, in Europe since the financial crisis. And the question is, can you say a little bit about the financial environment and the policy strategies in the US Fed versus like the European, central bank, and how has that affected sort of the differences in outcomes in Europe versus the US?
Well, it's an interesting question, yeah. So the US banks suffered at the beginning a more intensive crisis. You go back and look at what happened in 2008, 2009. The American banks, American financial institutions suffered a lot in this period, much more than the European ones. The recognition probably was faster. The actions taken were more decisive in the US than they were in Europe. In Europe, it took longer to take all these decisions. As a result of this, the American banks recovered relatively quickly, and European banks, it took longer to recover. And we got into the sovereign debt crisis and the euro crisis in 2011, 2012. So we can say that in the US, there was a financial crisis, 2008, 2009. In Europe, there was a financial crisis, a milder financial crisis, I would say, 2008, 2009. And another crisis 2 years later related with the euro, sovereign debt, and all these things. So while American banks start to recover relatively quickly, European banks were lagging behind on the back of this new crisis, and also the lower growth that we had in Europe compared with the one in the US. And I would say something that remains today, poorer demographics. Okay, the potential growth of the Eurozone is significantly lower than the US. And one of the main factors to me is also, I always tend to look at the demographics in the not only in the banking business, but in the banking business is what I said. After that, we entered in something that I was not, or probably nobody was prepared to see in the financial industry, in the negative interest rates. Yeah, that was, well, you ask everyone else in the industry, in, I don't know, 2010, 12, 13. If they were expecting to see negative interest rates, everybody would say, no, it's impossible. No? But we now been for 5 years in a row in negative interest rate scenario. That creates this divergence between American banks and European banks in terms of profitability and in terms of capacity to reward the shareholders and to return capital to the shareholders. The euro is improving. We still face in Europe, when you compare American and European banks, I would say we have some factors that are cyclical, some others that are structural. The cyclical ones are interest rates, is what it is. At some point will change. The other cyclical factor is the growth of the economy that sooner or later will go away. But there are several structural factors. Europe is not a single market as it is the US. So it's more work need to be done. Mm-hmm. In Europe, we don't have a capital market as vibrant and as active as you have, as the US has. And this does not allow the banks to be a balance sheet light compared with the American banks. We don't have the Fannies and the Freddies, where American banks put the 7 trillion mortgages and we keep those mortgages in our balance sheet with our capital. So, and finally, and that's probably up to us, banks in Europe, we charge less for the same service that they charge in the US, being fee income or being spreads. Spreads and fee income are lower in Europe than they are in the US. Probably for two different reasons. One is regulation. Mm-hmm. So European Union has been more interventionist in fixing prices. So one example is the payments, where they limited interchange fees in Europe. And this is one reason. The other reason is because probably excess capacity in Europe. Remember that in Europe, there are some of the main markets, 50-60% of the market share is in hands of non-for-profit institutions. Okay, so you have the Sparkassen in Germany, the cooperative banks, the Caisse de Dépôt in France. So this kind of financial players that they are not targeting, they are targeting not to destroy capital, but they are not targeting per se a return on equity above the cost of equity, and this put pressure on the whole industry.
Mm-hmm. Thank you. That's fascinating. So before we get back to policies, Jose Antonio, maybe could you speak a little bit about COVID and kind of what impact that's had and how has it been managed through this turbulent time?
The first thing, it's been better than expected, to be honest with you. Yeah? So I do remember in the spring of 2020 when we were, well, as you know, in the IFRS accounting and the IFRS accounting, you are requested to have a scenario and to project your future expected losses based on this scenario. This is a macro scenario, interest rate, asset prices, blah, 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 unemployment, all these things. And I need to tell you that we were grossly wrong. Yeah. So we were projecting in a scenario that was much worse than the one we've been living in 2021 and the one we expect in 2022. So the first thing that happened with COVID, we realized that we were able to run a bank without being in our premises. That was not that clear 1 week before. So suddenly we were forced to, in 1 week, we had 120,000 people around the world working from home. The majority of the service did very well from the very beginning. Mm-hmm. We never analyzed if this was the case before that. It happens, and we went into this. Some others that it took us, I don't know, a couple of weeks, 3, 4, 5 weeks to, and some of those were not the most complex one, were the most simple one. Yeah, not particularly strange things. For example, one thing, the call centers. Call centers is pretty straightforward business. Yeah, you pick the phone, you take the phone to the customer. There's some problems when you go home with the call center. Yeah, because the information is there, security is need to be taken into account, and this got some complexities. Having said that, I'm proud of how the banks, the industry, did in this time. Second thing that happens there that was better than I was expecting was the reaction of both central banks and governments. Mm-hmm. Immediately, the very nature of the crisis that was unknown for the majority, or for the overwhelming majority of the economic world, they reacted in a way that said, let's provide liquidity, let's keep the economy going, not to provoke a collapse. And this was done very quickly at the end of March, beginning of April, and suddenly the markets recovered. Those were some of the most busy days I do remember in my career, because we were, all the big corporates were hoarding liquidity and asking us to provide them liquidity just in case things got really bad. This was the period when 1 or 2 months later, the government provides some schemes, the guarantees for the SMEs and some moratoria for the individuals. At some point, we got like 150 billion euros loan book under moratoria. Yeah, so along the year 2020. So to make a long story short, when we came back from this, we found two things. Once our forecasting for unemployment and asset prices was grossly wrong. Unemployment didn't go that much up, or quite the opposite, went down. And asset prices, particularly house prices, because we have a large exposure to housing, went up instead of going down. This creates an environment in which today you've seen in all the banks in America and Europe lead to, we made tons of provisions in 2020, and we are releasing some of all of them in 2021. And well, the P&L is a bit distorted when you look from the bottom line. When you look from the operating profits, it makes more sense, yeah? Because last year we charged against the operating profit a lot of provisions. This year we are charging less, or even releasing provisions in the. So that's the situation right now. What remains to be seen is still the corporate world. The corporate world, we have like a wall in which we have SMEs that depend on the sector. They still are on the make after the COVID. And some sector like travel and travel-related activities across the world, we will see when this comes, how the companies are in terms of solvency and all these things. And what we're seeing on the other side is a tremendous M&A activity on the back of excess liquidity and low interest rates across the world. All the private equities, all the financial sponsors are looking for assets to buy across. Yeah? And for that reason, 2020 and 2021, to the surprise of everyone else, including myself, have been the two best years for CIB since the financial crisis. Yeah? So even many organizations did much better than before the financial crisis, to the surprise. This applied to the CIB, not that much to the middle market. Certainly, the retail is doing well on the asset side. Naturally, on the liability side, not that well, because interest rates are zero or negative. Yeah, that's a bit the history in the COVID. So far, so good. Yeah, so good. Very much better than we were expecting.
So maybe could you speak a little bit, Jose Antonio, about, given that things worked out better than expected, what sort of lessons did you get from the way you operated during COVID that you think you'll persist with even after the COVID crisis is over?
So what the COVID crisis brought to the whole economy, not only to the banks, is tremendous growth on all the digital virtual activities. Yeah, so suddenly, this was kind of an immersion in the digital world of the whole society. We were locked in our houses, and we start to establish the relationships through the digital, through the technology, the digital technology available for all of us. We were expecting this to happen in the bank, naturally, in the finance industry. We were preparing for this. We were in a big transformation since, I don't know when, but this means that suddenly the behavior of the customer changes. Once you start to relate with the bank in a digital way, and you start to do not only small operations, also more complex transactions, and you realize that this is more convenient to you, the customer experience is much better. And normally, this is our experience. When you look at the NPS of the bank, the NPS of the digital channels is much higher than the NPS of the traditional channels and the ATMs and all these things. Well, this means that the COVID probably accelerates what was expected to happen in, I don't know, in the next 5-10 years. It happened in 12 months. And suddenly we come out of this with the number of transactions executed in digital and the percentage of sales being done through the digital channels is the one I was expecting probably 5 years from now. Transactions gone from the traditional channels, other than the society is becoming more cashless than I was expecting, or that was the case at the beginning of 2020. And the relationship with the bank is established more and more through digital channels. This is also true for many industries. Yeah? So not only for banks. This is probably the acceleration of this is probably the most important fact that came out of the COVID. And this is required from us a shorter time to market in everything we do in order to meet expectations of our customers.
So if you think about, we have a couple of questions on this. One is, will the old business model continue to work now that we have had this acceleration? So do you see, for example, for Santander, a massive transition to digital where you might close, retail branches and just move to more digital?
Yeah, sure. This was the case before the COVID, and the COVID has accelerated this. Yeah. So if I look backward, I'm speaking by memory, the number of branches we have in Europe, and so 6 years ago, and the number of branches we have today more than 50%, less than 50% of the branches we used to have 5 years ago. Yeah, probably we have like 30% of the branches we used to have. During the COVID, this acceleration was significant. Yeah? So, and this is the question goes beyond branches, goes the fact that in the past, the correlation between market share and physical distribution was pretty high across the financial industry. This is not going to be the case going forward. And the question for the industry is, first, what kind of distribution model you're going to have? Is there a combination between traditional distribution and digital distribution that is going to be the winner? It's only digital distribution. What kind of products or services can be provided 100% digital, and which ones may need some face-to-face relationship? The more commoditized the product, the easier to go digital. In the SME world, still on the make, the digital relationship, particularly with the credit officers and all these things, with limited information in some cases, and gathering the data are not as good as the data you can get with personal connection and things like that. They're still on the make. The middle market is still on the make. And the CIB, the CIB is always is a more interpersonal relationship. But the retail will go, will be much, I wouldn't say 100% digitally, but overwhelming majority digitally. And the capacity to use the data in real time is going to become one of the main sources of competitiveness in the retail banking industry. In the CNI, well, still in trial and error, yeah? So how to find a model that fits for purpose there is still on the make, yeah? So probably some of the large and very large will go to the CIB space with the capital markets and all these things, but this space remains to be, this is particularly important in Europe, where, as you know, the overwhelming majority of the companies are SMEs. So in the US, the average size of the company is much larger than it is in Europe. And the model in Europe, the capital markets play a big role in the US, while in Europe, we still provide 75% of the funding to the economy, while in the US, capital markets have a much larger role and banks only provide 30%. So it's almost the opposite. But for that reason, in Europe, to find a model for the middle market space remains a task to be done, and plenty of experience, plenty of pilots here and there, but not a clear emerging model. Yes, in the payments space, yes, in the FX space, yes, in some products, but the relationship still basically established through corporate centers, physical corporate centers. Yeah.
Yeah. So you touched on this a little bit also, Antonio. One question came up: would it ever make sense for you or somebody else to enter a new market or region only through the digital channel without any branches? Do you think that's ever possible?
Sure. It's already happened. Yeah. So we have a subsidiary called Open Bank. Some of you know, it's 100% digital bank, and we are opening in markets in which we don't have presence. Yeah. So we are opening branches in Germany. We are opening branches in Netherlands. We are opening branches in Portugal, and we plan to expand into Mexico. It's pure digital proposition. Sure, it's not that is going to happen, it's already happened. Yeah. So for sure, we have this kind of animals that we go digital 100%, maybe with very small point of contacts, physical point of contact, because what we have seen in Open Bank that we operate all across Spain, and they got, in Spain, they have 1.5 million customers or 1.3 million customers. They have 2 branches just to show that they are somewhere. Yeah. So one in the building in which they have the premises, the headquarters, another one in Barcelona. That's it. Yeah, just to show that you are somewhere, but nothing else than nothing specific on those branches that you cannot do through your own mobile or your computer. Yeah. So, but for sure, plenty of new digital. The activity there is enormous. Yeah. So some of them are famous. Some of them got phenomenal market caps. You know, the Revoluts, the N26 in Europe. You got the new bank in Brazil. You got other initiatives, the Monzo in UK. So those are pure digital propositions that are trying to make their case, their business case, to work. Yeah.
So we have a couple of questions about capital moving to alternative lending platforms or shadow banking. Maybe you could speak a little bit about sort of decentralized finance, and what role do you see that playing going forward, and what would Santander's role be in there?
Well, we've seen in the last couple of years plenty of experience in this space. Yeah, so particularly lending from the famous funding circle and these kind of initiatives that were lending club and all these kinds of initiatives that were there, and they've been, I would say, relatively successful in lending money to the people, relatively unsuccessful on being stable along the time because funding issues. Yeah, the funding, when your funding relies on wholesale market, you are highly dependent on the situation of the wholesale market, and the wholesale market sometimes is in very good shape, sometimes disappear, and that does not provide liquidity. The great advantage of the traditional banks is the funding. Yeah, so you have stable funding that allow you to keep lending to the economy. It's possible to, the more developed the capital markets are, or the easier to develop this kind of business model. Okay, so because suppose you originate and you pass to the market, to the capital markets in different forms, maybe securitization, maybe outright sales, maybe synthetic securitization, but you need to rely 100% on the markets. Otherwise, one day you are forced to cut your lending, and this is destroy your business model. That has been the case to today. So with capital markets evolution, probably facilitate this business model. Are we already there? I would say no yet. You need to rely on some stable source of funding in order to make your business model sustainable in the long run. The DeFi, that is an interesting question, well, also has this problem. DeFi will develop. There's plenty of technology for doing that. You have the central banks discussing the digital currencies. I do think that the digital currencies will come in. And the question is what role the central banks want to play going forward with these digital currencies. They go through a model of intermediation through financial institutions, non-financial institutions, meaning banks or meaning other kind of animals that have the capacity to have the assets of the central bank. Up to what point every citizen has the access to the central bank. And this is much more difficult because in this case, the central bank should lend the money to someone else need to lend to the corporates, individuals, and all these things. And I don't know the kind of model, but we're gonna test these waters in the coming years. You see the ECB create a group that is working on the digital currency. The technology that is behind all these initiatives is extremely useful. The blockchain is extremely useful. And the question that is at stake here, and probably regulators, government, central banks, financial institutions we need to make our mind is how to assure the best for the citizens and consumers and corporates. At the same time, we keep financial stability. Not to create a system prone to runs or prone to instability or prone to higher volatility. This is the question. This is on the make, but digital currencies will be with us. I'm not meaning cryptocurrencies and all these things. I'm meaning the digital currencies from the central banks will be with us at some point in the future, no doubt. Yeah.
So we had a question exactly related to that, asking about Brazil and the growth of PIX, which is a central bank retail payment system. So I don't know if you could comment on that, and where do you see the future of that kind of system?
Well, there has been several initiatives, not only in Brazil, also in Mexico. There is the similar initiative from the central bank. Well, this is a game about efficiency. Yeah. So the payments industry, as you know, is basically an operational issue. And everything is about your efficiency in terms of reliability and in terms of cost. I will not look at this like a financial literacy in the sense of the balance sheet. I look more an operational issue that having efficient, fast payments with high reliability is the name of the game, and some central banks are trying to do that. I do not think that the central banks are, well, for some purposes like the Target 2 or the big payments, or maybe, but there is plenty of initiatives and plenty of seed capital willing to invest in the payments, and we are seeing phenomenal success across the world, improving the payments in the P2P, B2B, in the B2C, in all the spaces that makes the industry much more efficient. It is continue. I do think that the initiative of the Central Bank of Brazil was good. Mexico was also good, but you have plenty of private initiatives that are also doing very, very, very well. Yeah, and we are investing. We incorporate a company, the name is Pagonex, to play in the payments space because we want to play and to invest significantly in the payments space. Because we already have a position, and we do think that payments are the center of the relationship with the customer. And for that reason, to have a strong position in payments assures you access to customers and access to, in order to facilitate other financial services to those customers.
So we have a couple of questions about where do you see the world economy today, and in particular, the current high level of inflation, and where do you see this playing out? Do you feel it's temporary, or is this something that we're going to be with for a while, and what are the implications for Santander and for banking industry?
Well, the word temporary is the mantra of our days coming from the central banks. Yeah, so we were told before the summer when we were going out of the COVID, and the vaccine was working relatively well. We were told by the central banks, the supply chain is a bit dislocated and we're going to have some inflation coming out of this. And we heard about the chips and all these things. Oh, you cannot buy a new car. Your car dealer tells you need to wait 6 months because I don't have cars. I'm sorry. We started with this, and the central bank told us that this was a temporary issue. And the central banks have a very high credibility these days. Yeah? So because their track record fighting inflation since the 80s has been very good. Yeah. So the way they managed the financial crisis, Mr. Bernanke at the Fed, with the experiment of the quantitative easing, they got credit. So they have a long history of managing the monetary policy in a successful way, and they got credit for this, and their credibility is very high. What happens? Well, when I was told in May that this is temporary, I was thinking, well, it's 4 or 5 months. Suddenly we are in November, and at the time we got 3%, now we got 6%. And new people came into the table, like the energy prices and all these things. Now we see the central banks a little bit more, I wouldn't say, I don't know if the word is worried, but at least paying attention to this phenomenon. And what is happening is when the Fed was saying, very unlikely I'm going to increase rates in the next 2 years. Now they say, in 2022, may I review, the tapering is starting and all these things. What is for sure is we're going to live in a higher inflation war in 2021, 2022. It's not that temporary. It's going to last longer. Many countries were forced to react to this. You see the interest rates in Latin America, Chile, Brazil, Mexico, they went up. Poland, in the jurisdictions in which we have significant presence, went up. The market expects UK to react relatively quickly. The Fed market is betting on summer next year. And the ECB, that is the last standing man that says, for a while, we don't see the need to increase rates. So that's the current situation. What I do see beyond when they're going to increase the rates is the idea that we're going to live in what people calls a financial repression world. That means that the interest rates, real interest rates, will be zero or negative. Okay, so not as negative as they are today, probably not. It's not sustainable to have 6% inflation and rates zero, minus 6% real interest rates, not sustainable by any measure. But -1, -0.5, -2, zero interest rates, I think is the most likely scenario for the next 5-10 years. Whatever is inflation, as long as the inflation is controlled in the range of, let's say, below 3%, I do think that the real interest rate is going to remain in the negative territory, what the people call financial repression. Yeah, on the back of extremely high debt levels of all the governments around the world as a result of the COVID crisis.
So a question came up about Spain in particular. Jose Antonio, if you could comment on Spain and the level of debt and where do you see that playing out?
Yeah, well, Spain, before the crisis, the debt to GDP was in the 90s, 95% or something like that. After the crisis now, we are in the 115, 120, probably go back to 110 when the economy GDP recovers rather sooner than later. The structural deficit is still significant. Fiscal deficit is still in the region of, I don't know where the economies are now, but probably 3-4%. And they need to address this issue. So, or through higher economic growth or reducing expenses. It's true that there is this funding that comes from the European Union that will help in the next 2 years to address this issue and to correct some of the imbalances there. But it's also true that the structural fiscal deficit need to be addressed rather sooner than later once we are out of the goods as a result of this crisis. Mm-hmm. Okay, so that's my view, and that's the situation in Spain. Yeah.
Just a related question: do you? It was basically sort of an interesting question. Would you recommend that expats should move to Spain? Sort of as a retirement place. Is Spain a country that you sort of believe in? Going forward.
Spain is a great place to live. Yeah, so that's true. So for several reasons, the quality of life is very good. Security is extremely good, one of the best in the world. This is reflected in the life expectancy. So Spain has the third life expectancy in the world. So that means that the quality, the health system is very good. And now the COVID is at the lowest level, is the lowest probably level in Europe. So for expats, leaving aside all the personal arrangements they need to make, including the fiscal side, is a great place to live. And the main industry in this country is tourism. Mm-hmm. So tourists represent like 14% or 15% of the GDP, and it's a great place to live. Golfers love to play golf under the sun, and we got thousands of Brits, Germans, and people from all the countries in Europe coming to play golf in the winter. Not in the summer. In the summer, the sun shines almost everywhere. But all this is the dynamics in this sector continue to be extremely good. So the COVID is like a stop and go situation in my view. So one of the more aspirational goods for the people in the world is to travel, to know new place. Yeah? So and this is, I do think that the tourist industry has structural growth, secular growth in front of them. Yeah? So we need to address climate issues. Yeah, it's true, but I do think that there is significant growth there coming.
One more policy question. Basically, question is sort of, can the EU avoid a hard landing when quantitative easing finally, stops? And or sort of what would they need to do to prevent against a massive crash?
Well, I think they can. Naturally, we need to match carefully with a combination of fiscal and monetary policy. The problem in Europe is fiscal policy is up to the local governments, monetary policy is up to the ECB. And not necessarily all the countries go to the same speed and are at the same point in the cycle. Some countries will recover 19% GDP this year, some other next year, some other. Well, the cycle is not necessarily different. This is the complexity in Europe because fiscal policy, local governments, monetary policy, the ECB. So that's the reason why Ms. Lagarde, the head of the European Central Bank, she 2 days ago, talking to the European Parliament, she said, if we start tapering or increasing rates, probably it's worse than we remain on hold. Mm-hmm. Probably who is going to establish the time to start tapering and increasing rates? I do think the majority of the countries being out of the COVID crisis. What the majority means, some people may say 80% of the GDP, some other people may say 90, some others say 70. This is going to be the discussion. When is the time to do tapering? When is the time to increase rates? And the answer for now, the ECB is that coordinating fiscal policies is more up to the European Commission and the capacity to enforce fiscal policies that politically, as you know, as you've seen in the last 20 years, is far from easy. And this is the complexity in Europe. Yeah, but I do think that the ECB is going to be looking, and depending on what the governments do, they're going to react accordingly in order to try to accommodate this soft landing in the European economy. Yeah.
So we have an interesting question about sort of your perspective on ESG And sort of how is Santander preparing for the higher standards of rigor and transparency in ESG with your investments and other things that you're doing?
Okay, let's start with the issue of environment. Yeah? So we took commitments. Naturally, the top commitment is to become zero carbon by 2050, but with several steps well before. The first one is related with coal. By 2030, we are not funding new operations, and we do not fund anyone else that produce that coal is more than 10% of the business. So this is a hard commitment. There are other commitments that are on the make, depending on, because one of the things we lack here is standards. Standards are not yet well established. We are with other banks and other institutions trying to establish standards in order to measure properly our efforts here. But we are 100% committed in going into this direction in climate. Particularly important for us is Brazil. As you know, Brazil, Amazonia is always an issue here, highly controversial, and with different views from Brazil than from NGOs around the world, and we need to make things happen in a way that is does not create tensions, political tensions, geopolitical tensions, and other kind of initiatives if this is not matched properly. So we are there. In the meantime, the more difficult thing for me is not that much the green economy, is how do we manage the brown economy? In the meantime, the transition period of the brown economy towards green economy is the more difficult issue. And we are creating things for us to know and for advising our customers. And we are developing these skills with the 16th taxonomy, I hope with some standards and with technical expertise that we are building inside in order to act on our behalf and to advise our customers in this journey. This is one part of the story. The second one, the S, for us, working in emerging markets is extremely important. Yeah? So we have initiatives large initiatives in Brazil, Peru, Colombia, Mexico, all across, with initiatives that we call Prospera, that is Prosper. Yeah? Prosper, that where we have two initiatives. Prosper is microcredit to allow the people to establish their own business, their own small business, and micro company to start even some shops or small businesses. And we have at the same time, in the past, in these countries, and today is still largely the case, there is like 40% of the population that has no access to financial services because the traditional distribution model through branches didn't allow us to make this business at the break-even level. And those customers were remaining in the sidelines of the financial industry, using only cash, and they store the cash. With the new technology, we launched initiatives that is called Super Digital to allow those customers to use the infrastructure to pay, to store some money in a car, and to pay in the shops, restaurants, and all with this card, and to withdraw money from our ATMs. And we are targeting to provide basic financial service to this part of the population that has had no access to this, and with the Prosper for those who want to start a business, to lend them some money to start a business. That's extremely important for us. This is our targets are there, not 1,000, millions and millions of people, both in Super Digital and in Prospera, in those countries. In more mature markets, the approach is totally different. It's more in relation with a financial education. Mm-hmm. It's more with the transparency of the products and all these things we do, and it's more in the way we establish the relationship with the customer in order to make not only the customer experience to be good, in order to make the customers easy to make their own financial choices with our advice that they take the right financial decisions in their own based on the advice we provide. And finally, the governance issue, we are working basically on diversity in the company. So diversity in some countries means gender. For us, in some other countries means race and gender. In some other countries means race, gender, and where you were born or where you live, or some discrimination inside one country. So it depends on the countries. And where we have targets on this, we pay the executives. We introduce this into the executive scheme, both the climate, social, and these issues. And naturally, people always focus on the board, but the problem is more or less in the middle, the gender pay gaps, the equal pay gaps, and all these things. This is something we are working. And one aspect that is becoming more and more important is the diversity on the background of the people working on the bank. Normally, the background of our people tend to go to economists, lawyers, this kind of people, and we try engineers, software, and all these things also. We try to incorporate people with other backgrounds in order to, well, to have a more diverse talent inside the company that we think is good for shareholders. It's not, that is something that we do for all reasons, and that I think is good for the company, good for the shareholders, and good for all of us. Yeah.
Jose Antonio, thank you. We're out of time. I'm just deeply grateful to you for taking time. I know you're an extremely busy person, and for being so open and transparent and answering all these questions about sort of your history and the history of Santander, and also where you see the future of banking going. This was incredibly valuable, and I really appreciate you taking the time to join us today. Thank you.
Thank you, Madhav. Thank you to you. Take care. Bye.
Thanks, everyone. Bye.